Hello everyone, welcome back to our channel. Today, we're going to dive deep into the world of finance and talk about a very interesting topic, short interest, and specifically, we'll be looking at Ally Financial. So let's get started. Short interest is a concept that's central to understanding market dynamics and investor sentiment. It refers to the total number of shares of a particular stock that have been sold short by investors but have not yet been covered or closed out. Let's break this down. Selling short. This is an investment strategy where an investor borrows shares of a stock from a broker and sells them in the open market with the intention of buying them back later for less money. The investor is betting that the price of the stock will decrease, allowing them to profit from the difference. Covering a short. This is when an investor buys back the shares they sold short, either to lock in profits or cut losses. This is necessary to return the borrowed shares to the lender. Short interest volume. This is the total number of shares that have been sold short. It's a cumulative number that includes all short sales that have not been covered. Short interest as a percentage of float. This is the short interest volume divided by the number of shares available for public trading, the float. It gives a sense of how significant the short interest is relative to the total market for the stock. Short interest is a key indicator of market sentiment towards a particular stock. High short interest can indicate that many investors are pessimistic about the company's prospects and are betting that the stock price will decrease. Conversely, low short interest can suggest that investors are generally optimistic about the company's prospects. However, high short interest can also lead to a short squeeze, a rapid increase in the price of a stock that occurs when there is a lack of supply and an excess of demand for the stock. Short squeezes happen when short sellers cover their positions on a stock, resulting in buying volume that drives the stock price up. It's important to note that while short interest can provide valuable insights into market sentiment, it's just one piece of the puzzle. Investors should consider a variety of factors and indicators when making investment decisions. Ally Financial, a leading digital financial services company, is a popular stock among investors. As such, it's important to understand the short interest in Ally Financial. As of October 31st, traders have sold 14,750,000 shares of Ally Financial, Ally, short. This represents 4.94% of Ally Financial shares. This figure is significant because it gives us an idea of the market sentiment towards Ally Financial. Short interest is a key indicator of market sentiment. A high short interest means that a large number of investors are betting that the price of the stock will go down. Conversely, a low short interest indicates that fewer investors are betting against the stock. In the case of Ally Financial, the short interest is 4.94%, which is relatively low. This suggests that the majority of investors are not betting against Ally Financial and expect its stock price to rise. However, it's important to note that short interest is just one factor to consider when analyzing a stock. Other factors such as the company's financial health, its earnings outlook, and broader market conditions should also be taken into account. Moreover, short interest can change rapidly, so it's important for investors to stay updated on the latest data. Websites like MarketBeat and Fintel provide regular updates on short interest figures for a wide range of stocks, including Ally Financial. Investing in the stock market involves risks, and it's important to do your own research and consider seeking advice from qualified professionals before making any investment decisions. If you like this video and want to see more, subscribe. The short interest ratio, also known as the days to cover ratio, is a measure of the potential number of days it would take for all short positions to be covered or closed out. It's calculated by dividing the total short interest by the average daily trading volume of the stock. The result is expressed in days, and it represents the theoretical number of days it would take for all short sellers to buy back the shares they have shorted, assuming all trading volume is made up of short sellers covering their positions. In the context of Ally Financial, the short interest ratio is currently 3.0. This means that, theoretically, it would take 3 days of average trading volume for all short sellers to cover their positions. But what does this mean for investors? A high short interest ratio can indicate that there's a lot of negative sentiment towards the stock, as it shows that many investors are betting against it and it would take a long time for them to cover their positions. This could potentially lead to a short squeeze, where a rise in the stock's price forces short sellers to cover their positions, driving the price up even further. On the other hand, a low short interest ratio suggests that there's less negative sentiment towards the stock. In the case of Ally Financial, a short interest ratio of 3.0 suggests a more balanced market sentiment. However, Like all financial metrics, the short interest ratio should not be used in isolation. It's important to consider it alongside other indicators and factors when making investment decisions. Short interest is a powerful tool for gauging market sentiment, and it can have significant implications for investors and the stock market. Market sentiment. High short interest can indicate that many investors are pessimistic about a company's prospects and are betting that the stock price will decrease. Conversely, low short interest can suggest that investors are generally optimistic about the company's prospects. In the case of Ally Financial, a short interest of 4.94% suggests that a significant number of investors are betting against the stock, indicating a bearish market sentiment. Short squeeze. High short interest can also lead to a short squeeze, a rapid increase in the price of a stock that occurs when there is a lack of supply and an excess of demand for the stock. Short squeezes happen when short sellers cover their positions on a stock, resulting in buying volume that drives the stock price up. If a company with high short interest releases positive news, it could trigger a short squeeze as short sellers scramble to cover their positions. Risk indicator. Short interest can also serve as a risk indicator. Stocks with high short interest can be riskier investments because they have a large number of investors betting against them. If the stock price starts to rise, short sellers may rush to cover their positions, which can drive the price up even further and result in significant losses for those who are still holding short positions. Contrarian indicator. Some investors use short interest as a contrarian indicator. They believe that if a stock has high short interest, it could be undervalued, and therefore, it might be a good time to buy. This strategy is based on the assumption that the market may be wrong about the stock, and if the company proves the market wrong, the stock price could rise significantly. However, it's important to note that while short interest can provide valuable insights into market sentiment, it's just one piece of the puzzle. Investors should consider a variety of factors and indicators when making investment decisions, and always do their own research or consult with a financial advisor. That's all for today's video on understanding short interest in Ally Financial. Remember, investing in the stock market always comes with risks, and it's important to do your own research before making any investment decisions. If you found this video helpful, don't forget to like, share, and subscribe to our channel for more financial insights. Until next time, happy investing.